Don't be an If you are a real estate investor, watch this video so you don't make the same mistake that I've seen other people make. So everyone who invests in real estate needs to familiarize themselves with Schedule E. Schedule E is where you report your rental income and your rental expenses. Now let's just go through what is all on your Schedule E. At the very top of Schedule E is where you're gonna put the address of your rental property, and it's also gonna be where you classify what type of property is it. Is it a single family home? Is it multifamily? Is it commercial, short-term rental? What type of property exactly is it? And you'll also want to notate how many days was the property rented out. And this is very critical if you invest in short-term rentals, because remember, in order for a property to be classified as a short-term rental, the average tenant needs to stay for 7 days or less. And they will look at the total days rented out that you put on your Schedule E, and they'll try to figure out if the average tenant actually stayed for 7 days or less. And then right below that is where you start to get into your income and expenses. Of course, at the very top is where you report your total rents received, total rental income. And then right after that, you got your expenses. Now, some of the expenses that are included in these lines include your advertising, your cleaning and maintenance, your travel and auto, and then of course the big ones that I feel like every real estate investor should double check and make sure that these lines are not blank. You have your insurance, that's line 9. You have line 12, which is your mortgage interest. Most real estate investors do have some type of mortgage interest unless they've paid the property off and they don't have any type of debt. Another big one is going to be taxes, that's line 16, and then the other big one is line 18, that is depreciation. I don't know how many returns I've seen, especially DIY returns, that have line 18 missing your depreciation. Now, of course, the more blank space you have on your tax return, the less expenses that you are actually claiming. And some of the things that I see people miss will be the Airbnb fees. I see that commonly missed. HOA fees. Don't forget repairs and maintenance and any supplies you would have used to maybe do repairs on the property throughout the year. If you invest in short-term rentals, you're probably paying utilities, or heck, even if you have long-term rentals, maybe you're paying the water bill. I've seen people sometimes leave the water bill out of their utilities. Again, a lot of these missed expenses can be managed if you have all of your income and expenses coming out of one main business bank account. If you can separate and have a business bank account for each rental property, that would be ideal for tracking income and expenses.